Joining us with this week's Ag Week Market Extra is Frayne Olson from NDSU, and we've had a pretty good retracement in the grain market. It's not just been weather, it's not just been trade, but kind of a combination of things, right?
It really has, and as you mentioned, there's really three components to it. First became the weather. So if we start at the peak that we saw at the end of May, the first thing was we had some issues and some concerns about planting progress, about kind of early development, and that really gave us some lift in the marketplace. Once it looked like the weather turned and it looks like the growing conditions were improving, prices started retracing, and then all of a sudden we got the big news for trade. Things came tumbling down even harder, and one of the other kind of added fuel to the fire was also the fund trade. You know, the outside financial markets coming in. What I always tell farmers is that the funds tend to be trend followers, not trend makers. And so when they see a turn in the market and in a very aggressive either downward move or upward move, they jump onto the bandwagon and push prices either too low or too high relative to the fundamentals.
So let's start off talking about trade. China, a possible 25% tariff to go into effect on July 6th. How much of this is programmed into the market already?
You know, almost all of it's currently programmed in. I mean, and that's been, again, part of the fuel that's added to this downward trend. It's added to the negative psychology in the marketplace right now. So really that increase in the value-added tax to 25% has been built into the marketplace right now.
And if we get a deal with China, will it come soon, and then will we see a positive response? Will we be able to recover?
You know, everybody hopes that we'll have some kind of agreement or somebody will back down before the July 6th deadline. I'm not terribly optimistic that will happen given the current politics and kind of the tensions that we see in the world trade. So if there is an agreement, will we see a rebound? Absolutely. I mean, that will take a lot of pressure off the marketplace and saying, well, trade will occur. But we won't, in my opinion, see a complete retracement back to those levels that we saw at the end of May, simply because of the weather outlook and the expectation for a very large crop.
I hear producers say China has to buy our beans. They don't have a choice.
And yes, if you do the numbers on, again, the available supplies in the world market, the exportable stocks, China does have to buy some soybeans from us. The Brazilian and Argentines don't have enough volume to be able to meet their needs, total needs. But the question then becomes at what price? And again, given the uncertainty and some of the trade things that are going on right now, if I'm a buyer from China and I can get the supplies from someplace else, I'm going to do that. But this value-added tax, the extra cost to that, does have to be shared. So the buyer's going to share some of that. The seller will share some of that. So again, it's a matter of at what price can we get trade flows to rebound and to be able to get the beans through the system that we can.
We should also point out that export sales to China from the U.S. have been slow during this time period, but that is normal, right?
It is. So we have a really, really heavy seasonal pattern in the U.S. soybean exports. So there's been some comments kind of floating around. It's like, well, China's not buying any soybeans from us now. Well, this time of year, they normally don't buy any soybeans. The key export pace or the export demand comes really in the winter months. As we start into the U.S. soybean harvest, export sales start to pick up very, very aggressively. They kind of peak out towards the end of harvest. They'd have a slight retracement in volume of sales into the winter months. It just costs more to buy beans out of the bin than it does buying beans out of the field. And then by the end of March, we tend to see another softening as the Brazilian crop comes on and some of those buyers start to shift to the new crop Brazilian market.
Longer term, does the U.S. become the residual supplier to Brazil, though?
Well, to some degree, we're the residual supplier right now, given the price differentials and the kind of the perceived quality differences between the U.S. and the Brazilian soybeans. Kind of the preference right now is to go to the Brazilian market. One of the challenges Brazil is going to have, though, is being able to meet their shipments and meeting the time deadlines. So if you can't, as an international buyer, if you can't get it from Brazil, then you shift to the United States. Well, the export market also knows that if you need beans in a hurry, if you have to make some emergency purchases, you can come to the United States and you might have to pay more for it, but you'll get the beans when you need them and the quality that you need them. So longer term, will we become the residual supplier? I really don't see that happening.
We are also hearing more tariff talk from Europe, India, Turkey, of course, Mexico and Canada are all part of that mix. And so there is a longer tail to this, isn't there?
Potentially there is. And one of the things we've got to remember is when we talk about the trade deals and the trade negotiations, this is on many, many, many different products. Agriculture tends to be an important piece. It gets a lot of attention, but it's only one slice of a much bigger trade package. So we're talking about intellectual property rights, we're talking about environmental regulations, we're talking about the worker safety and food safety issues. So there's a lot of pieces that go into this. And so when we talk about it, agriculture to some degree ends up being a pawn that's played in the discussions. So for us in agriculture, it's a big, big deal, but when you look at the bigger picture and the entire U.S. economy, it becomes a much smaller player.
Let's also talk about the weather and the great conditions that we have had. We have these extremely high crop ratings. Certainly there's already talk about 180 yield on corn, over 50 on soybeans. Does that translate those ratings to yield or not? That's a hotly debated topic.
Right. I guess you can mathematically show some correlations between crop condition ratings and final yields, but the correlations, the relationships are a little bit loosey-goosey. So personally, I don't like to put too much emphasis on that. The way I try to use the crop condition ratings is compare what happened this week versus what happened last week. Is the crop condition improving, or is there some softening? And I also like to dig a little bit deeper to say what's happening in each of the states, because obviously some of the states have a bigger role to play in total production than other states. So even though there is, again, mathematically a loose correlation, I typically don't put a lot of emphasis or weight on that.
And when we look at the reports coming up at the end of the month, the acreage report, then that translates over into the July production report. There's already talk about more acres of both corn and soybeans. You add these to these higher yields. What are you seeing? What do you think is going to happen?
I do expect to see some small corrections, some small adjustments in the corn, soybean, and wheat numbers as well because of some of the spring wheat adjustments I think that happened in the state of North Dakota during planting season. But to be honest with you, my personal opinion is I don't see a big shift or big changes. One of the individual questions is, so if we increase our corn and soybean acres, where are those acres coming from? And there's really only two sources that have large acreage bases that can see some shifting. Three technically would be wheat, but again, winter wheat's already seeded. Spring wheat, I think we'll see some small adjustments. The other possibility would be some cotton acres, if there were some cotton acres shifted out of cotton and into, in particular, soybeans. The other possibility would be alfalfa hay. We always forget about the hay acres, and there's quite a few of those in the U.S. But again, given hay prices, I don't see major shifts out of those crops and into corn and soybeans. So my personal opinion, I think small adjustments, but nothing that I would consider major market movers.
So do you think the tops are in this market, considering what we've talked about with weather, even if we get a deal with China worked out?
Yes, I do. I think short term we do. In the next several months, at least during the summer growing season, I think the highs are in. If we start to see some production problems later on in the season, or if the yields come in a little bit lower than we expected, we can still have some frost damage or some frost issues later on in the season. That could put some additional lift and spike into the market as we get closer to the harvest time period. But for the next several months, I do think the short term, the tops are in.
A trade deal would certainly help prices, though.
Absolutely. That would change the market psychology from kind of a negative bias to more of a positive bias. The other thing with the trade is there were some discussions early on that in order to try and narrow the trade gap between U.S. and China, that China would try and make an additional effort to buy more agricultural products as well as energy products from the U.S. to try and narrow that differential between what we buy and sell from China. If that comes in and say, well, we're going to give a preference to U.S. products versus other products, ag products across the U.S., that would obviously put a real positive lift into the marketplace.
And I guess when we look at the other thing that might move the market, there's been some discussion of a trade compensation package. We don't know what that would look like, but would that be helpful to the marketplace?
Probably directly for prices, not necessarily. For farmers' incomes, obviously a huge impact. There's a lot of questions on what can be done, whether it be through the WTO and being compliant there, as well as just the regulatory kind of challenges we have right now in being able to get something through the current system. Would it require some additional changes in farm policy? Another question would be, where would the money come from? Because current USDA funding programs aren't large enough to be able to make major compensation, so there'd have to be some additional funding packages put in place too. Would it have an impact on the psychology of the marketplace and underlying fundamental prices? Probably not, but again, from a marketing standpoint, it may change the timing of when farmers sell their crops. And again, the market's really worried about the flow of grain and making sure that the deliveries are made on time. So if there's some additional compensation, changing the cash flow of farmers, that may change farmers' timing, but when it comes to the underlying prices, probably not.
Lots to talk about this week. Thanks so much for joining us.
Thank you.
NDSU's Frayne Olson joining us with this week's Ag Week Market Extra.